Hello, everyone, and welcome to Contango Ore's live roadshow today, hosted by Six. I'm pleased to introduce their president and CEO, Rick van Nieuwenhuyse, who's going to be going through the latest updates from Contango Ore, and after, we're going to be entering into a live Q&A session. So, if you'd like to participate, please feel free to ask questions in the chat found on the right-hand side of your screen, and later, if you'd like to get in touch with the team, feel free to fill out the survey that's going to be posted in the chat as well. As always, this summit is being recorded and it's going to be available on demand in the coming days, so look out for that if you want to refresh on today's information. And without further ado, Rick, I want to pass things over to you so that we can get started.
Perfect. Thank you, Cam, and thank you everyone for joining us today. I'm up here in Fairbanks, Alaska, where it's a beautiful day. I'll go ahead and start the presentation. I'll obviously be making forward-looking statements, so I do draw your attention to our slide here. Just high level, just a quick introduction to who Contango Ore is. We're working in Alaska, Tier 1 jurisdiction. Our Mancho project, which is our flagship project, is I think one of the world's highest grade open pit gold mines at 8 grams per ton. It's shown here in the image below. Our project is de-risked. We have an agreement in place with the Tetlin Alaska Native Tribe on whose land we're working. We have all our state and federal permits, so we are fully permitted for mining. And we have our major contracts in place with Kiewit and Black Gold Trucking and a number of other contracts. So it really is a turnkey operation managed by our joint venture partner, Kinross. Our financing is in place. We have a $70 million credit facility with ING and Macquarie Bank. And we are expecting strong cash flows when we start production in 2024, next year. We have a huge land package at Mancho, but also in our other exploration projects throughout Alaska. So just give you a quick introduction to the location of our projects. I'm going to focus on our Mancho and our Lucky Shot projects, the gold stars there. Over in the east of Alaska is the Mancho project, and then just north of Anchorage in central Alaska is our Lucky Shot project. A couple of other early stage exploration assets, but we won't really have time to talk about those. Mancho, development stage, construction underway, joint venture with Kinross. We're working on land that's owned by the Tetlin tribe. They'll receive a royalty. We've had that agreement since 2008, so we've had a long working relationship with the tribe. And what makes this whole project unique is that we are not building our own processing facility. We're using the facility at Fort Knox that is owned by Kinross, which of course de-risks the project in a huge way and has allowed us to get permits quickly, relatively quickly. Since we don't have to build a mill and a tailings facility, we've saved ourselves and our shareholders a lot of capital and shortened the time frame to get into production. At Lucky Shot, we plan to do much the same thing. It's a historic high-grade gold mine. It is also a fully permitted mining site, but we do own that 100%. As I said, I won't talk too much about early stage exploration assets in this presentation. Quick corporate overview. We are traded in the NYSE American, our symbol CTGO. We were informed last Friday we are on the final list to be included in Russell 3000. That'll happen on June 26th. We have 7.6 million shares outstanding. All of our warrants and options are in the money. And we have a convertible debt for $20 million. As I mentioned earlier, we have a $70 million credit facility with ING and Macquarie, and we are already and permitted with construction underway at Mancho. So the Mancho site, this is a road that we built. We built on the road all winter long, and so that put us about 3-4 months ahead of schedule. We continue to be on budget and ahead of schedule, which is a good thing in today's world. We do expect production in 2024, and we will continue to explore our 2,800 square kilometer lease with the Tetlin tribe. We approved a $33.6 million budget for the first half of 2023, and that's nearly completed. As I mentioned, we're ahead of schedule and on budget, and we just recently approved the last big push budget of $136 million for the second half of 2023. And site construction is well underway, and I'll show you some slides of that. We were up there just about a week or two ago, and lots of activity. Lots of big equipment, leveling out areas, preparing the site for mining. Kiewit is our mining contractor. They're, of course, one of the largest engineering construction mining companies in the world. They've got about 20 pieces of equipment up there now, and in another week or so, they'll have all the 777 cat trucks, 100-ton trucks, the blast hole rig, and the 6030 cat shovel. That's on their way. In fact, they're probably being delivered this week and assembled, and they'll start mining in very short order here. So stockpiling the ore. The site at Mancho is very simple. You can see by the image here, there's two open pits, the north pit and the south pit, or main pit. Our non-acid generating waste rock piles are immediately adjacent to the pit. Mine site's located on top of a hill, so you really don't have a lot of water to worry about. But we'll put proper ditching in place to have the water run around us. We'll have temporary storage stockpiles for potential acid generating waste rock, which will go back in the main pit at the end of the mine life. So a very, very simple mine plan. And again, we're about 8 grams per ton, so a very, very high grade that will be trucked up to the Fort Knox mill. The trucks will be our transport hauler is Black Gold Trucking. They're a local group out of North Pole, Alaska, which is just outside of Fairbanks. They've been in the business a long time. You see down in the lower corner there, the truck fleet is starting to show up, as well as the trailers that will haul the ore up to the Fort Knox mill. So another very important contract in place, and again, on time and on budget. The other thing that needs to take place to accommodate the Mancho ore is some what we call mill modification work at Fort Knox. They're kind of in 3 areas: the mill modifications themselves, so things in the mill that need to be adapted, and most of these are tanks and pumping, because the Mancho ore is about 15 times the grade of average grade of Fort Knox ore. We will be batch processing, so once a quarter for about a month, Mancho ore will run through the Fort Knox mill, and then it'll switch back over to running the lower grade Fort Knox ore, which is a little over half a gram per ton, I think. So the mill modifications are basically because we need to add more cyanide for the gold, we need to add more carbon, more cement, overall other reagents. So basically there's a whole series of areas in the mill where there'll be expansion for tankage and piping, basically. The other area is zone 3 there, the 2 sort of linear lines that are forming an L shape. That is basically a conveyor system that reroutes the harder ore that goes through a SAG mill first, and the harder ore then gets spit out. Currently what Fort Knox does, since the hard ore at Fort Knox doesn't really have any gold in, they put it out on this conveyor into a stockpile off to the right there on the diagram. Our hard ore, as it goes through the SAG and into the overflow, does have a lot of gold in it, so we'll capture that and reroute it back around to get reground. So those are the changes in the mill itself. Zone 2 there over to the northeast is the laydown area, the stockpile area for the Mancho ore. So it's right next to the mill. They'll build a little wall there, and the side dumps will dump it over the wall, and then it'll be loaded into trucks that'll haul it up to the stockpile, which is just immediately to the west of the mill there. You can see it in the lower corner of the image. So all that is underway. The final work area is the tailings facility. That is it's in-pit storage, tailings storage at the bottom of the old Fort Knox pit. The Fort Knox pit continues to expand to the west, but the eastern part of the pit is down below the ore now. So they'll basically build about a 3.5 mile long pipeline. You can see the images there. They cement these pipes together in about 500-foot lengths, and then drag them down the road and then bolt them together. So that work is underway as well, and pretty much everything is on track for getting into production in 2024. Based on the feasibility study, we'll produce a little over 900,000 ounces of gold over a 4.5-year period. Our share, our 30% share, is 300,000 ounces, or 67,500 ounces per year. Again, head grade is 8 grams per ton. We have $1,116 all-in sustaining costs per gold equivalent ounce, and this is mostly gold. There's a bit of silver here, but it is primarily gold, a gold deposit. And our capital is coming in on budget at $189 million, with our share being just under $57 million. We will start capitalizing strip here next quarter when we're actually mining and putting temporary storage facilities for stockpiles for the higher grade ore. We'll be capitalizing that. So again, everything is really well underway. Kinross does all the heavy lifting here. They're the manager, which will, of course, we're on track for production in 2024. One of the other things that they'll have to do at Fort Knox is buy a new furnace, because the one they have isn't big enough to pour all the gold we're going to be pouring. It'll make the Fort Knox facility produce about 500,000 ounces of gold a year. So it's a big step up for Fort Knox, and of course we're proud to be have Kinross as the manager of the project there. So look forward to production and cash flow in 2024. Meanwhile, that allows us to advance our other projects, and I'm going to focus on our Lucky Shot project, which is located just outside of Anchorage. It's about a 2-hour drive from Anchorage, an easy 2-hour drive out of Anchorage, right up to the mine site. This is a view of the Lucky Shot vein. The red line there extends for about a mile, and the vein trends. So the strike of the vein is open both to the east and the west. We've recently released a resource that demonstrates the grade of the vein averages about 15.6 grams per ton, which is about ½ ounce per ton. So we are. This is a high-grade underground mining situation. This mine was in operation in the late 20s until 1942, when the War Act shut all gold mining down in the United States for a period of time. And all that production was from the Lucky Shot, what we call the 500 level at it. A little bit of production from Moore Baby and Coleman further up the mountain, but the lion's share of the production was from Lucky Shot. In the 1980s, a company called Ensearch had the idea of putting a tunnel in the footwall of the vein, down about 100 meters, 120 meters down below the Lucky Shot level, and was going to go in and mine underneath. He got about 2/3 of the way there and gave up. When we acquired the property, that was good infrastructure, so we basically refurbished the underground Ensearch tunnel. You can see their idea. This is all the little spaghetti map here is the underground workings, historic underground workings from the Lucky Shot mine, and the level over here just above us, above the Ensearch. And we then, this last year, extended the underground workings, intersected the vein itself, and put some footwall infrastructure in place to begin the drilling program. Our objective this year is to finish out that underground infrastructure with a drift off to the west, and then a drift in the hanging wall side of the vein, so we can continue to drill the vein down dip. And meanwhile, you can see also over at the Coleman, a little bit of mining took place there, but we have a nice resource outlined over there as well, which we'll be able to access from the underground workings, extension of our underground workings at Lucky Shot. We are a permitted mine. We're fully permitted for mining operations. In any mine, safety is the most important thing every day. We are proud to have a zero lost time incident reporting. We are MSHA reporting, so like I say, we're an official mine site. We just released our initial resource for the Lucky Shot, and we have two segments of the vein. It's the same vein, it's offset by some faulting, but But the Coleman segment, you can see, obviously has a lot more drilling than the Lucky Shot segment at this point in time. There's about 150 holes in the resource at Coleman. Indicated tons, 190,000 tons, averaging 15.6 grams per ton for 95,000 ounces. Small but high grade. And then over at Lucky Shot, on the Lucky Shot segment of the vein, we've got about 36 million tons at just shy of 9 grams for 10,000 ounces. Obviously, we only have 29 holes over there, so we don't have a lot of area drilled, and we certainly don't have much of that area at any level of density of drilling that we do have over at Coleman. And that is our main objective this year, is to infill drill the Lucky Shot to the level of drilling that the Coleman is at. And I'll show you some images that'll show what our plan is here. Of course, there's an old adage in the mining business that grade is king. Half ounce per ton ore is a very good grade to mine, and we believe we can develop a nice mine plan here to produce something in the neighborhood of starting out maybe at 30,000 ounces and then ramping up to 50 or 60,000 ounces with additional development work. One of the things that we did use was a very conservative capping strategy. The Lucky Shot vein is a gold quartz vein, so it's pretty simple mineralogy. It's gold and quartz and very small amount of sulfide. But the gold is what we call nuggety gold. So you have very splashy numbers sitting next to your, sort of average, 3 gram material. And next to that might be a 20 grams per ton or 100 grams per ton. So your capping strategy has to be appropriate for the level of information you have. As we gather more information, we'll be able to improve and lighten up that capping strategy. Right now, we're at the Coleman, where we have 150 some odd holes. We're still using a capping strategy that's reducing our gold content by just shy of 30%. You can see that, and it's the grade you're capping, because it's these high grade intervals that you want to limit or minimize the amount of influence they have on the rest of it. So if you use an uncapped, as an example, if you used an uncapped grade, so just whatever the assay was, you threw it into the mix, you'd have almost 21 grams per ton versus the cap grade that we've quoted at 15.6. So similarly over at Lucky Shot, again, we have far fewer data at Lucky Shot, far fewer drill holes, and you can see the capping strategy is almost 40% metal loss from 9 grams per ton to 13 grams per ton. So as we get more information, as we drill more holes, as we do some bulk sample test work, we'll be able to liberalize that capping strategy somewhat. And our hope is to get somewhere between 10 and 30% of our gold back by using a more appropriate capping strategy with more information. You can see in this this long section through the vein deposit, you can see the historically mined areas in the grayed out area here. So these are Lucky Shot. Again, that was where most of the production in the district came from. There's about 250,000 ounces produced historically in the Lucky Shot, and an average grade of 40 grams per ton. Now they did hand cob the ore, so they selectively mined, and then they sort of upgraded it by hand cobbing it. Of course, we won't be hand cobbing it, but we may use ore sorters to help us out in elevating the average grade that we end up sending to the mill. But you can see over at Coleman, we've got there was a small amount of mining done here, basically in this little cutout. I think it was about 20,000 ounces or so that they mined there. But you can see the plunge of the ore chutes is very well defined. And we are expecting to see some of the same orientation in terms of plunge control at Lucky Shot, which is pretty much just straight down the dip of the vein. But we do see something a little different over at Coleman, where there's a southeast plunge to the ore body as well. Again, much better defined because we have a lot more drilling over at Coleman, the 150 holes versus the 29 holes. They're a fairly wide space over at Lucky Shot. Now, the only place where we do have pretty tight control on drilling is right in here at the west end of the west dip West Drift, excuse me. And that's where most of our ounces came from at Lucky Shot. You can see here, this is a perspective kind of flipped around the other way. You're looking to the north now. This is the in-search tunnel. We call this the ballroom. That's where we drilled the pilot holes to tell us exactly where the vein was, so we knew where to put our underground infrastructure. We built the West Drift last fall and got 2 fan shots off, a total of 6 holes per fan. And the idea is to continue to do that all the way along the drift and extend the drift over the footwall drift over to the east, and then a hanging wall drift on the other side of the vein in the hanging wall. That'll be the work that we plan to do this summer. And you can see when you do these fan shots, you get a much more detailed series of drill holes along the vein. You see the variability; it's highly variable. But when you average this all out, we're confident we're going to get up in the half ounce per ton range, just like we see over at Coleman. So another thing I wanted to point out here is when you go underground, you actually see a lot more things than you can see in a single drill hole. We found some other new veins that were not mapped before and sampled them. These are just grab samples, but they ran 20. They're over here on the right here, 26 grams per ton in one, and 379. That's 12 ounces per ton in the sample. So you can see how variable the grades are here and why you need to do a lot of sampling with a lot of drilling and a lot of underground development work. So this is the plan. As I mentioned, we completed what we call the 2090 West Drift in the footwall. We completed 2 fans of drilling where the kind of pinkish outline is here. That's our indicated resource for Lucky Shot. The inferred is here. It's very wide spaced. But we're going to get these fan shots all along the West Drift. We'll drill an East Drift here on the 2080, and then we'll come up in the hang wall on the 2200 and 2280 drifts, both in the east and west in the hang wall. And then from the hang wall, you're drilling down. From the footwall, you're drilling up. But that should, if we're consistent in finding what we've been drilling, we think we'll be coming up between this and the Coleman somewhere in the 250 to 350,000 ounces of gold. And that's plenty enough of gold resource to outline to develop a mine plan around. As I mentioned earlier, drilling or producing something in the neighborhood of 30,000 ounces at startup, and then ramping up to maybe 50, 60,000 ounces as you get more development work completed. So I will stop there. This picture of Chris and I. Chris is our mine manager. He was former mine manager of the Pogo mine for 8 years, and he runs a tight ship. So we'll look forward to updating you on our exploration activities at Lucky Shot. And I'll leave you there with to turn it back over to you, Cam, for questions.
Yeah, absolutely, Rick. Thanks for the great presentation. And just as a reminder to everyone in the audience, if you'd like to ask questions, now is the time. We have had a few questions come in advance of today's session beginning, so we're going to start with those, and then we're going to get to the questions that have been posted in the Q&A. And the first question here, Rick, is your website shows a number of exploration plays, also in Alaska. Are there any updates anticipated this year from those projects?
Yeah, unfortunately, probably not. We want to focus on getting everything lined up for Mancho production. That's obviously the most important thing here. So we're want to make sure we have all the capital we need for that. And then next up in line is really Lucky Shot. And get ourselves, if we can achieve our objectives of Lucky Shot and start up at 30,000 ounces, now we're producing 100,000 ounces of gold a year. That's starting to be fairly serious. They're both high grade mines. And with that, then we can use some of that cash flow to advance our other early stage projects. Great.
Okay. Next question is, what optionality remains at Lucky Shot? Will Contango in its current configuration be building the mine for certain?
Short answer is I don't know the answer to that right now, because we've got to find the ore body and define an ore body that's large enough for us to want to complete an engineering study to say that we actually do have a mine and do the studies. I mean, but just in round numbers, I mean, a half ounce per ton, that's worth basically $1,000 rock. So we think we can underground mine for $200-300 a ton. It'll be narrow width mining. The vein dips at 30 degrees, so it's not the ideal angle from an underground mining perspective. It'd be much better if it were near vertical. So it'll be a relatively expensive mining, so call it $300 a ton. But processing, we know what our costs are at Fort Knox. It's not hard to put rocks in a box and send them up to the Fort Knox processing facility. It's a discussion we're going to have with the folks at Fort Knox. If it makes sense to do that, then we know what those costs are, and we know what the transportation costs are. So that's a viable alternative. But we also want to what we could do ourselves. So that is do a series of studies to decide whether we want to build our own mill and tailings facility. Obviously, there's some advantages in doing that. You're much more in control of things. But on the other hand, if the objective is to generate more cash flow for shareholders, we might take a hard look at that option of just trucking the ore up to Fort Knox. And I have to say, we do have the advantage of having rail about 20 miles from the Contango site. So that is something we'll take a hard look at. Right.
Okay. Gilla wants to know, what is the royalty to the Tetlin tribe, and for how many years is the partnership cemented?
So the Tetlin agreement was started in 2008. It's a 3%. It starts at a 3% royalty, and then every 5 years it augments by 1% and caps out at 5%. So that's the royalty side of it. It's a 30-year agreement that can be renewed. So I think as long as we're finding ore there, and the Tetlin tribe's got a 3, 4, or 5% royalty, we'll be in good stead.
Right. Jonathan wants to know if there are any political risks that you anticipate if there's a change in government next year.
You're talking about federal level, I guess, since the federal elections next year. We're fully permitted, so short answer is no. We're working on private land that's owned by the tribe. So there really aren't any other permissions we need from the federal government. And of course, the state government has always been very pro-resource development in Alaska. I would say Alaska is state level has a very rigorous permitting process. But they get things done. It's not like oftentimes with the federal government, it's 2 steps forward, 3 steps backwards. But in Alaska's got a very rigorous permitting regime and a very fair and prompt permitting process. We went through the federal permitting process in just under a year, and the state permitting process took about a year as well. So that's a reasonable amount of time for permitting in our view.
Fair enough. Reggie has a 2-part question just about drilling. He's wondering if you can review the drilling timeline in Alaska for Lucky Shot, and he's also just wondering how much more drilling is scheduled for this year.
Yeah, good question. So we're aiming at drilling about 13,000 meters underground at Lucky Shot, and that's work that we can do all year long. And then we'll also have about 3,000 meters of surface drilling on the Coleman. And that is limited by the field season. We want to have that work wrapped up by the end of September, because that's when the snow starts flying, and it's you don't want to be up on top of the mountain when the snow's flying.
What, in your opinion, do you think is your biggest career win? He makes the comment that he believes that management track record is the most important indicator in this industry. So if you wouldn't mind.
Well, I think Mancho is going to be our most successful mining operation to date. Obviously, being involved with finding Donlin early on, I'd say that's a huge career win, and that we outlined a 40 million ounce gold deposit. But I left Nova Gold in 2011 after putting together the feasibility and the permitting team, and here we are 2023, and they're still permitting that project. So certainly a career win, but so, but I'd like to, I guess as I get older, I want to make sure these things actually get into production. So that's why we're sticking close to the close to infrastructure, so we don't have such a high capital and such a complicated project. I like simple, so as I said, we're going to stick to the road system. I like grade. Donlin's a great grade for a 40 million ounce gold deposit, but I like Mancho 8 grams per ton. I like Lucky Shot at 15. I think those are things that we can quickly get into production and continue to increase our cash flow. So, we want to keep doing what we're doing. We're good explorers. I like the idea of partnering with the groups like Kinross that have a mill already built, so that's something we don't have to do, and we can just take advantage of that by paying them a toll fee.
All right, great. Peter's wondering, will this round of funding hold through to the Mancho construction?
Yeah, this is the last money to go in for Mancho, the $70 million credit facility, which we've already taken advantage of. We used $10 million of it, but part of the agreement with the banks was that we would put in the next $30 million. So that will be the last money in for us at Mancho, and I think we're well on track to be able to accomplish that.
Right. Tony wants to know, is there enough of a local workforce for Mancho, or will you have to fly in workers?
Yeah, no, there's plenty of workers there's kind of, obviously there's two sites here, the mining site. We built a 200-person camp. Most of the workers will be Alaskan. I'm sure there'll be a few outside specialists, but between the relationship that we've had with the Tetlin tribe over, it's been since 2008, so we're going 15 years here. Lots of training has happened in that time period, and again, there's no mill at Mancho, so it's truck driver jobs, it's mechanic jobs, it's administration. So that'll be the bulk of the workforce there at Mancho, and of course Fort Knox is the Fort Knox crew that's been operating there for 25 years, and most of them live in Fairbanks. So I'd say it's going to be damn near an all Alaskan crew at both sites.
Great. Peter wants to know, what's the timing for the next news at Lucky Shot?
Probably the start of drilling. We'll get the money raised here and then get the program underway. First with get the surface drilling at Coleman done. We've got about 3,000 to 4,000 meters of drilling. We'll get as much done as we can this year, and obviously that might spill over into next year. But that's the first priority, and then getting the underground rig relocated underground. And once we're underground, we can drill year round. So I'm not as fussed about the underground drilling. As I said, it's a little more expensive operating in the wintertime because you got to push snow around. But we've had an active avalanche program in place. As you can tell, it's a steep mountain there, so we want to make sure we have a good, safe place to work. We built a snow shed in front of the portal, so we're well out of harm's way there. And like I said, we do have an active. We trigger the avalanches with a cannon, and so that's just something we'll stay on top of. But yeah, that's probably the next announcement for Lucky Shot, and of course at Mancho. We'll probably go back out to site in September and see a big hole starting to be dug with the 60-30 shovel and the 100-ton 777 haul trucks moving material into waste piles and ore piles. And I suspect sometime later this year, we'll be hauling the initial ore from Mancho up to the stockpile at Fort Knox. So a lot of news flow this year.
Coming from Jean René, he's just wondering if the access road is fully built and what condition it's in.
So this is with respect to Mancho. The road is, that's not 100% complete. I'd say it's 85% complete. But we've driven all the heavy equipment up there. So from a standpoint of the next step at Mancho, all the big equipment's all using that access road.
Absolutely,
So from that
great.
standpoint, it's complete. But they've got to put berms on it and things like that. So
No, fair enough. Okay,
it's functional.
there we go. Ronnie wants to know what gold price was used for the economic assessment of Mancho.
Yeah, so Kinross is a pretty conservative company. They still use they're using $1,400 gold for. I should say the banks use $1,400 gold to do their assessment from a banking standpoint. Fort Knox used $1,300 gold from their perspective, and that's a corporate wide decision. In our economics feasibility study, we use $1,600. I guess we're a little less conservative on that standpoint. The 3-year running average for gold, I think, is $1,825. So I think we're still being fairly conservative there. Certainly today you can hedge gold at over $2,100 an ounce. So it just kind of gives you a range of gold prices that are realistic here.
Absolutely. Jean-René has another question. Just wondering about what the total percentage is owned by institutions, and if any of those institutions are interested in picking up more to get Mancho built.
Yes. Short answer is yes. The Alaska Permanent Fund's a good shareholder. The Hexagon, Tocqueville, Gabelli, they're all shareholders that understand the gold space, and I think they like what we're doing, and I think there's a good. I'm not overly concerned about raising the money to. Mainly, what we want to raise the money for is to do other things too, right? We want to get Lucky Shot, the exploration program, up and running at Lucky Shot, and at least get the surface holes done this summer and get underground this winter.
Right, absolutely. And Graham's question is just wondering what your financing schedule looks like for this year.
Well, we're hitting the road hard here right now. So I think we expect some news on financing in the next few weeks.
Has Kinross expressed interest in increasing its shares in Mancho as Contango, or is that split likely to hold through to production?
Yeah, Kinross is not a shareholder of Contango, at least not to my knowledge. So it's a joint venture interest that we share. The name of the joint venture company is Peak Gold LLC. So it's 78% owned by Kinross, 30% by ourselves, and then of course there's the royalty to the tribe. But like I said, just to make that clear, Kinross is not a shareholder of Contango, the public company.
Okay, great. Paul wants to know, and this is in regards to the 25% shareholder group. Is it a large number of insiders who own that 25%, or is it a small group?
No, it's a small group. We have a 5-person board. All the board members own stock, including our chairman, and then I own about 8% of the company. So that's the group. I think, what is that, 6 people?
Okay, great. Paul has another question, and he's just regarding the short timeline for construction through to production. Were your permits fast-tracked, is what he's wondering?
Not really, no. Because we had so little impact, we had 5.6 acres of wetlands disturbance, and that was the federal permit we needed. It's called a 404 permit or 404 wetlands permit. It's administered by the United States Army Corps of Engineers. That's barely over the 5-acre limit that triggers what they call a NEPA review, National Environmental Policy Act review, which either requires then an EA, environmental assessment, or an EIS, environmental impact statement. Because it was so little impact, the Corps opted for an environmental assessment review, and typically those can be done in a year's time. An environmental impact statement does typically take 2 or 3 years to execute, because you have all the public series of public meetings and that the government has to do, not the company. We always do community outreach and let the community know what we're doing. But in EIS, there's a formal process that the federal government has to do. So we did not have to do an EIS here because it was so little impact. And then the other permitting, of course, is with the state, and that's effectively our air and water quality permits. and our mine operating plan and our mine closure plan, which I guess technically aren't permits, but they're plans that are approved by the state. And you can't operate your mine without it being approved by the state, nor can you close the mine. So that all took about a year as well, and that's fairly typical. Again, we are not a complicated project because we're not building a tailings facility, and we're not building a mill, and we don't have a big power plant because we just don't need a lot of power. We just need to keep the lights on and keep people warm. So yeah, it was on a relative basis a fairly simple permitting process.
Great. Okay. And then Nico's just wondering, how much do you have to raise this year?
We're going to raise between $30 and $50 million. We want to be able to advance Lucky Shot and get a resource out. Our objective here with Lucky Shot is to outline a 300,000 to 400,000 ounce resource between Coleman segments and Lucky Shot segments of the Lucky Shot vein, and then develop a mine plan around that. And that mine plan may look a lot like Mancho's plan, in that we're mining, in this case it's underground, not open pit, but mining, run of mine ore, and then transport it up to Fort Knox. I mean, it's a big mill. We have a tolling arrangement with Fort Knox already with Mancho, so it makes sense to look at that from my perspective as an alternative. We'll look at other alternatives. We'll look at maybe developing a mill and a tailings facility ourselves. May not, obviously that involves more capital and more time. And I kind of like simple. If we can mine 15 gram material and put that in a truck, transport that up to Fort Knox, that certainly makes a lot of sense to me. We've got a good relationship with Kinross, and they've got a hungry mill, and I think we can work to feed that. We do have an advantage on the Lucky Shot side of Alaska, because we're about 20 miles from the rail line that goes between Anchorage and Fairbanks. So it's a lot cheaper to transport ore using rail. It's about a third the cost actually than truck transport. Now we would have to get it to the rail and get it from the rail station up to Fort Knox. So you've got those two components to sort of add on, if you will. But at any rate, it's something that we're going to take a look at and evaluate. But first stop is to define a resource that we can put a 5-10 year mine plan around, and so this drilling program that we want to execute, and which is again why we want to raise the money. That's the next step.
Okay. Well, Rick, that looks like all the questions that we received for today. So I want to thank you for going through the presentation and the Q&A. Of course, I also want to thank everyone in the audience who participated. But Rick, before we wrap up, I want to pass things over to you for any closing remarks.
Yeah, and thank you and Six for hosting this. Thanks everybody for joining us today. Take a look at the website. If you have questions, there's an info@contangoore.com on that website. If you write your question into that, I'll get back to you. Or somebody else might be. I might ask somebody else if it's something I don't know. Yeah. Meanwhile, lots of news flow as we bring Mancho towards production, and as we get our drilling program underway at Lucky Shot. Obviously, we'll have lots of news flow out of that because we will be drilling year round there. So I'll look forward to updating our investors and shareholders as time goes on here. So thanks very much.